Welcome to another episode of Lightspeed Investing Podcast. I've got Stephen Orr again here today, and I'm super excited to have you back, Stephen, as we're going to do a deep dive, right, with the audience on your big beats rules of trading.
Well, thanks so much for having me back, Philip. I saw your last few podcasts looked great. You're doing a great job. I love what Lightspeed's doing. And when you asked me to do this with showing up my big beats rules of trading, I mean that's exactly what we need to do, right? Is to bring that knowledge that I've gained over the last 32 plus years of trading and how to apply that to our own lives. And I'm looking forward to sharing that today.
Yeah, and if I recall correctly, you've got a total of 28 rules, right?
Yeah,
So
I got a long list of rules.
yeah, so what we're gonna do is we're gonna break them up. We're gonna cover about 9 rules per episode. Now, just so the audience has, some kind of context, right? You've been in this game for over 30 years at this point. So would you say out of these 28 rules, are they all, yours? Are they original under yours? Or like what is that ratio in terms of what you have, put towards the markets and what you have learned from your own mentors?
That's a great question. I think with those years, I think the one thing you should always learn is to have wisdom, right? Is to pick up wisdom from others as well. There's some really good traders out there in the world and that have come before us. And as my friend Tyler Wood from CMT Association always says, we stand on the shoulders of giants, right? And I want to glean from that. I want to be able to glean from some of the smartest people in the trading world to help me, with my own trading life. And when I see that and I apply those principles, it always seems to work out for me. And it's when I make mistakes in the market and I lose money, I look back, I go, you know what? There's a rule that I messed up with. I got to remember that rule again.
Hmm. I love it. I love it. So let's go ahead without further ado. Let's dive into it. I think backstage you mentioned something about where, 40% now of these rules is your own spin and the other 60 comes from other mentors, right? So we'd love to hear what these first 9 rules are, which ones you can identify as more so your own, experience and journey, and the other ones, the ones that you glean from other people.
Yeah,
So
and I think that's a good point. I mean, one of the things that I always say to have a good background when you have these rules and apply them is to read certain books that I think have been impressive in my own life, and has set me on my course of being a trader and an investor and where I'm at now. And I think one of the coolest people on still alive today and doing quite well is a guy named Peter Lynch, and he wrote a book called One Up on Wall Street, and I recommend everyone buy that book. And what's interesting about that book is this guy started at Fidelity Magellan. He was carrying golf clubs and went from there as a caddy to getting a job at Fidelity and running one of the largest funds at Fidelity, called Fidelity Magellan. And how did he do that? Well, he did a thing that I actually believe is the very basics of trading. And that's why I say read this book first. He
Mhm.
said, buy what you know, meaning that if you go to a grocery store and you pick up a can of Coke and you're drinking Coca-Cola, great. You know what? You should invest in it because other people are buying that. And if the prices go up and more people, supply and demand, all of a sudden. So one of the rules that he said inside of it was he was watching his wife go through the grocery counter and she was buying pantyhose and he bought Hanes leggings. And what they call Hanes brands, and he it was his first 10 bagger, meaning that he 10x'd his money in investing in the
Love
company,
it.
right? So, when I look at that, I think that's the very basics of all trading is having a thesis. So that to me is the beginning of my trading was reading up One Up on Wall Street.
Awesome. And you also have other books to recommend outside of this one, right? So that would be your first book recommendation. What are your other book recommendations?
Yep. And I think the second book that you need to read is called The Richest Man in Babylon. And the
I love
reason
that.
Yeah,
Absolutely.
I mean, I think that's almost required reading in business nowadays. And the principle of the book states that, look, it's great to make money and being an investor and you're creating things and you're working. But as Warren Buffett once said, you're always going to work till you die unless you have your money working for you overnight. right? And that what that means is you need to be invested and you need to have that money working for you already. A good example of him is obviously when he buys the S&P ETFs, right? He's saying if you don't know anything about markets, just buy the ETF and be done with it, and time will pay you off, right? It's the same thing, right? But he was saying in The Richest Man in Babylon to have several streams of income, to have your money working for you. And that's exactly right. So even if you do lose in one area, say you're not doing very well in futures trading, you're doing well in maybe stocks, or you're doing great in futures and not so good, not to have more than one stream of income, as well as businesses. So I totally believe people should be reading The Richest Man in Babylon.
Well, on top of that, it also echoes, I think, investing in what you know, right?
Right.
Because there was a scenario, I don't know, I don't remember all the details, but I think I do recall someone had erroneously made a bad investment, because they did not understand the particular investment. They just handed off their money, right?
Yeah.
I think maybe something around gold or like bricks of cement, whatever the case was, concrete cement. But that lesson, right, allowed that character in the book go, okay, like if I was ever to put money towards something ever again, it's got to be something that I have a good understanding of, which obviously echoes Mr. Peter Lynch's advice.
Yeah, it's a very good point. I've had customers and clients in the past. I had one client one time tell me I lost a bunch of money in biotech, Steve. How do I fix that? And I said, well, the first question you have to ask is, what do you do for a living? And he goes, I'm a plumber. I own a plumbing company. Well, that's great. Then you know about housing markets. You know when the markets are going up and down. You know what to invest in. That's right. And he quadrupled his money within 3 months, right? Because he knew the housing market probably better than anybody else around. He knew when to buy plumbing equipment. Guess what? He bought plumbing equipment stock. So that's it's exactly right. Buy what you know. I love biotech stocks. My mom is a pharmacist by trade, and I learned that growing up, right? But I wouldn't expect on everybody to understand biotech stocks.
Love it, love it. So that's two books, right? To as the opener. Do you have any other ones?
Yeah, I think anybody who's interested in going further in their career within the finance world is The Reminiscence of a Stock Operator by Edwin Lefebvre. And he pretty much gives you a good overview and what things that he went through as he started his career in the markets, but at the very beginning and how things have changed over time. But Reminiscence of a Stock Operator is one of those books that you need to understand how the markets work. Even in our fast-paced world now that we have with computers around us and surrounded by TV screens, the one thing you need to learn is that the mechanics of the market are still the same. The supply and demand. There's only so much stock. There's so much demand, and you got to match that supply with demand. And that's why we have exchanges, why we have markets. I think when people say to me all the time, hey, the market went down, is everybody just selling? Well, every time there's a seller, there's a buyer somewhere. There has to be a connection, right? And so sometimes a lot of people miss the mechanics of the markets. And I think that gives you a really good beginning understanding of the mechanics of how the actual market really works. A lot of people tell me all the time, hey, I'm looking to be a broker here, Steve, or an investment advisor. What's your advice to me? And I say, well, the number one outside of a financial background, maybe it's a college education, that people always ask for on Wall Street is as a degree in psychology, because you need to understand what everybody else is doing and understand how they're thinking about when they're buying and selling, what the impulse is to make them buy here and not here, whether it is a chart, whether it's a news article, but to understand that. And the basic mechanics will get you going with reading Reminiscence of a Stock Operator.
I love that. I love that. And how thick are these books, by the way? I
They're
know the
they're
Pen
not
Babylon
very
is
thick. Yeah,
a
they're
little
not very thick
bit.
at all, man. You can probably read them in a couple of nights, hanging out. And one of the cool thing about they're fun to read too. They're not one of those books that have a lot of jargon in them, and they don't have a lot of charts and numbers and stuff. It's kind of an understanding to get your mindset. I think that's the key, right? Is a mindset.
It's so common, I think, for success, regardless of industry, is getting your mindset right. You
Right.
know, getting that foundational psychology right. Because if you don't have that, no matter what ups and downs you go through, even with the technical skill set, you cannot weather the storm appropriately, right? You don't want to get too high and you don't want to get too low. You want to make sure you stay consistent and not lose enthusiasm despite any obstacles in your way. So I love those recommendations, Stephen. And do you have any more, or is that the
Oh yeah,
three?
we got a few more here. I think the next rule here is trade what you know. We've been talking about that, right? I think some of the best futures traders are also farmers. You would expect that, right? But they're in the middle of it, right? They understand corn and soybeans and hogs and lean hogs and cattle. Why? They know when things need to go to market. They know when the weather patterns change, and they're very good at trading futures. And I always tell people the same thing. If you want to be a doctor, talk to a doctor, right? Because you guys know how the game works, right? You know how to become a doctor. I wouldn't tell somebody to become a doctor if they become a doctor and go talk to someone that is surfing because they don't know how to become a doctor, right? But that's the key here is when you want to learn futures, go to companies like yourself, like Speed Investing, right? Because you're already doing, you know the ins and outs of the game. But when you want to be in the game, in the markets, and I don't like saying game markets, you want to be the one person who understands what they're actually doing. You don't have to have a deep, dark calculus mind to understand the markets, but you do have to understand what it is that you're actually investing in. When you're investing in futures, you've got to understand margins and requirement margins, initial margins, and maintenance margins. You've got to understand the basics and mechanics of that. So, meaning trading what you know does not just necessarily meaning that if you're a plumber, trade plumbing stocks. It also means understand, have a good indication of what it is you want, and specialize in that. I've obviously had a great career of being able to trade everything, but I don't always recommend that. I always tell people to, if you want to be futures, just trade futures for a while. As my mentor always said, if you learn futures, you can learn anything, right? Um, and I will also say, when I say trade what you know, it also means that when you're in the markets, that you also look at the markets as an entity, meaning that if you're going to trade corn, then go into a field. I remember as a kid, I used to go in the cornfields and pluck an ear of corn out and see how there's rust on the corn. Oh, the corn looks good. It's really high. We're gonna have high yields of corn this year. The weather has been good. The weather's been bad this year. Oh my, guess what? Lower supply, higher demand. It's very basic. So psychology plays into trade what you know.
I love that, and it actually reminds me of now. And now it makes sense, right? Of a successful client that we have who is more so on the rural side of New York, right? And he runs a beer business. I actually did another podcast with him in regards to his progress and evolution, and like it at the time, I was kind of so shocked and amazed because I'm like, wow, someone from the rural side of things, obviously not very immersed with technology and computers, doing quite well with trading. And upon what you just mentioned, farmers being better commodity traders now, it's starting to come full circle for me. So
Yeah, I mean,
that's
think about it.
fantastic.
If you're a wheat farmer, I mean, there's massive problems in Russia right now getting wheat out. Guess what? That means the farmers here have to produce more, and maybe it's feed for the cattle. Maybe the cattle aren't doing well, and all of a sudden prices go up and down based on that. They're going to be great traders.
Yeah. Uh, I'm with you. I'm with you, and I can see why. So, after the books, you want to echo trade what you know. I think we're now that's rule number 4. So, moving forward, right? What is the name of the game, Stephen? What are we ultimately looking to do day in and day out?
The name of the game is wealth preservation. As my grandfather used to say to me, it's easy to make money, Steve. It's easy to spend money. It's not easy to keep money and putting it away and investing. And the name of the game is wealth preservation, meaning that you need to spend your time as you make money putting it away. I just made some money in crypto. I bought the dip there and in Bitcoin. And guess what? I took my profit off and I put that away and I put it in cash and I'm going to put that to other things. That's wealth preservation, not spending it, not doing other things with it, but taking the money that I made and putting it back into the market somewhere else. But wealth preservation also means that you also diversify. It also means that you start to create a wealth. I think a lot of people don't understand what wealth is. People think that their checking account is wealth or how much money you have in your brokerages. Wealth is everything. It's your house. You are an investor in everything. If you own cars and homes and And if your car devalues, that wealth preservation goes down. The idea is to buy things that make you more money, trade what you know. And when you do make more money and you start to build up these other lines of investments and other lines of making money coming into you, as you say, in the richest man in Babylon, right? That's exactly right. So that we need to make sure that we continue to grow our wealth and not just it's not a game to me, right? Wealth preservation also means investing in your own self too.
Mm.
There is no better person on the planet than your own self, because when you invest in things, you should also invest in yourself by reading those books, by buying courses, by going to people like Lightspeed and learning. You can never go wrong by helping yourself. So I believe that wealth is also yourself, and your family too as well. I also believe that your family is also a very good area of wealth as you grow that too, and you grow as a person, your own personal psychology and how you grow your mind. That's a great wealth preservation, but keeping it and building on that.
Absolutely. And you know what you're getting at is something that I've eliminated from my vocabulary, which is I don't ever say I spend time anymore. I'm always investing time, right?
Right.
So who am I investing time, energy, and effort in? What am I investing time, energy, and effort in, and so forth? And absolutely, you are always going to be the best asset to get an ROI. As a matter of fact, the more successful conversations that I have with fellow successful people, the more that I've realized, financial growth is a reflection of your personal growth. So as long as you keep growing you will also grow in other areas of life, right? Such as finances, spirituality, healthiness, right? And happiness. Now, the question to you, Stephen, is what is your percentage of wealth preservation and diversification? So as you know, at Lightspeed Investing, we like to make at least $1 a day, right? So out of that dollar, how are you divvying that up, right? What are you putting in the bank percentage wise? And then what are you doing for diversification purposes?
So that's a great question. I will say this much, that when you are doing your wealth preservation, always do one thing, either at the beginning of the year or when you start your trading, to have goals. So if you set a higher goal than you think you can do, you'll probably get it. Meaning that if you say, I want to make $1 million this year, okay, well, the way to eat an elephant, right, is a bite by bite. So break that down. There's 270 trading days, so you have to break it down by the third, and then how much you're going to make a week and a month. And if you don't get it that week, or don't get the money that you set that day, in the breakdown, don't worry about it. Just get on to the next day, right? And you'll find you probably pass your goals very quickly. Set yourself, early goals and longer term goals. You want to be, a billionaire by the age of 30. Okay, that's great. But they also need to be ones that are attainable, because you don't want to set yourself up for failure either.
Right.
But I'll also say that when you set up yourself for goals, don't be discouraged if you don't hit your goals either. That means you've got another chance to hit your goal the next year or the next month or the next day.
Gotcha. So for you right now, obviously each person's journey is different, but to share some personal insights, how much are you putting in the bank, right? Out of the money that you're making,
Oh,
percentage?
I would say about 10% every day, right? On the trading, once I make my money, that then I peel off about 10% of the profit, shove it into a money market, and goes into another rule of mine. Always have powder. You always need to have cash around, so you're absolutely right. But when you take that other part and invest it, and I always look for things to invest that have been beaten up too, like stocks that are being beaten up, or maybe a commodity that has really been taken down. A good example of that would be back about 3 years ago, during COVID. The price of lumber was going through the roof, took some profit off of that, waited till lumber prices came back down, and then started to invest in lumber again. I think that's kind of the key, right? Is that you learned, as your wealth preservation is coming up, to also take a little bit of money off the side, put some money away, and be prepared. Yeah.
So, okay, 10% goes to, wealth preservation. What about diversification out of the other 90? Are you maybe putting another 10% towards another basket? What do you like to personally?
Well, that's a very good question. That's very dependent on what's going on in the markets too, as well. A good example of that would be not too long ago when Bitcoin took a big dip because of Germany and Mount Gox, and it got down to 55,500. And I thought, okay, you know what? I've got some cash here. I'm going to stack some sats, and I pulled the cash out and put it into crypto. Now we're up, what, 15% in the last week and a half. Guess what I did today? I took some cash off, put it away, and it's sitting in cash again. And I made enough more fresh money, fresh investment money, right? And the rest of that will go right back into Bitcoin and stay there. And then I'll look for other ones. It doesn't have to be in crypto now. I can take that cash out of the crypto and maybe I'll put it in something else that's been beaten up, like maybe oil stocks.
Gotcha. So it's more so dependent on, I suppose, your own wallet and your targets and goals is what you're saying.
Absolutely. And diversification too, right?
But at minimum, you want to stay 10%, towards your own bank, and then maybe another, what, 10 to 20, 10 to 30 for that diversification?
Correct. That's correct. Yeah. About 25%. Yeah.
Oh, okay. And so total, in totality, you're looking at about 35% going. And then
That's
the
right.
other 65, the rest of that 65, you keep it in the trading of the deal.
Absolutely.
Love it.
Always be invested. Never, never, ever be total cash.
Yep, absolutely. So, that is the name of the game, Stephen. What else do you have for us?
I think one of the biggest problems I've even had my own self over the years is don't be afraid to sell your dogs or your
Mhm.
losers. If you have a position that you're in and it's a loser, it's really costing you money and it's not good. Yeah, it may come back. That stock or commodity may come back, but don't be afraid to sell it because it's going to cost more harm than good, even if the price comes back. It's still going to be in your psyche. I lost money on it. Sell that loser, get rid of it, and just reconstitute yourself. Okay, you know what? I made a mistake there, but let's go find another place to change this and put the money somewhere else. So I always say, don't be afraid to sell your losers. I think Jim Cramer says it all the time on Mad Money. Look, gosh, this is terrible. Get rid of it, dump it. Ooga ooga, right? I mean, he makes fun of it, but the truth is, we do need to understand that sometimes that will not only affect your portfolio financially, but it'll also affect your psyche, which cannot be affected. That needs to be squared away long before you ever get into an investment. I always say the same thing. Before you ever pull the trigger and buy something, you better have your mind right of why you're doing it, not just because someone on Twitter told you to buy it or it's a good thing to buy. You should be up here right, and that sometimes can be affected by not selling your dog.
Gotcha. And we have a similar saying in a different way here is don't let your loss escalate.
That's right. That's right.
Don't
Correct.
let your loss escalate. Now, what are your parameters, right? Like for us, we talk about points. So, are you talking about if it go past 10 points, like a 10-point stop loss, 20 points, 30 points? Like where would you say once it get past a certain amount or level, you're saying get rid of
Well,
it?
to me, each asset class is different. So crypto is way different than
And let's focus on futures, right? Since we are
futures. Okay, yeah. So I would say in futures are fast moving, right? They have a lot of volume, and sometimes stop losses can get triggered very quickly, and that's okay. And I always tell people make sure you put your stop losses in, right? Because that's just silly.
Well,
Um,
that's the one thing about money management. Once you trade up to a certain contract amount, I think over 20, especially in the hundreds, there is no stop loss anymore.
That's right. That's right. I totally agree with that. But I will say this much. For me, a 15% loss is not a good fun place to be. So I usually set my limits right around 15%. I'm not a happy camper there. If I see a stock that's up down 5% against me or against me 5%, I look at it very carefully. I think about it and I go, you know what? My thesis hasn't changed on this. I agree with this. I'm going to buy more. But then when it continues to sell off or whatever and it goes against me, then yeah, I will start to peel back and go, okay, I made a mistake here. Something's not adding up for
So
me.
15%. So would you say what is your risk to reward ratio that you're giving me for that
I always
in the futures? Like
70,
1
70 to
to
30, 70, 30.
70, 30. So 70% wins,
Yep.
30% losses. Gotcha.
Yep.
Okay.
Don't let it get behind that or you'll be in trouble.
Right. Right. Yeah. So don't lose more than 30%.
That's
And
right.
with the stop loss, maybe keep it right at that 15, right?
And I think a lot of people don't really understand the losses to the limits, but you can also put trailing stops in too, which I do a lot of times. I'll put trailing stops in to make
Yeah.
sure that if things do change and my mind starts to change again about this, then when those limit losses
So,
will change.
right. So to really, in really simple terms, if you're looking to extract 100 points from the markets, you should not be down more than 15 points on that trade.
That's right. That's
Yeah.
correct.
Yeah.
100%.
Yeah. Love it. Love it. And how many contracts are are you personally trading when you enter the futures markets? Just a ballpark.
A lot. I can trade between 50 to 200 in a day. It does not bother
But
me.
you're not managing money. This is just you, right? This is
That's
your.
correct. Yeah.
Love it.
I can happily handle 50 to 200 contracts without batting an eye.
As a retail trader, right?
As a retail trader,
That's a
yes.
retail trader. Yeah, that's right. For those of you who don't understand, typically speaking, institutional money like Wells Fargo, JP Morgan, Bank of America, they're moving in the thousands of contracts, right? And so usually when you're in the hundreds, you're in money management. Stephen is blessed to be able to be a retail trader, right, between 50 to 200 contracts without managing money. So just to give you guys some perspective here. And so okay, let's talk about the next one then, unless you have anything to add here in regards to
Well,
not
I
letting
think it's one of
the
my
loss.
favorite rules, and I always say this all the time. Every day is a new opportunity. It's always a good time to get your mind right. The next day, I think one of the things that I always tell people is get a good night's sleep. Make sure you're prepared. Have a ritual. I have a ritual that I have music that I listen to that gets me up. In the mornings, I turn the computers on. I know it's almost like a regiment in a lot of ways of how I start my day, reading the news and the journal, and I have ways that I look at the markets, and I have my screens on, and I get my mind set right. If you're just coming into it and you're hungover from the night before, it's just not going to work. And you need to be prepared for that day. You need to understand what's going on. You need to know what happened in the overnight markets in China. You got to know what's going on in the world, which is one of
Now,
the rules of the future.
and just so the audience know this, emphasis, right? Point of emphasis. There are different markets that certainly require you to pay more attention. So what Stephen is talking about here is, especially if you're trading stocks, right, and anything that's tied to fundamental analysis, which means you need to know these global economic trends. You
Yep.
need to know, what's really happening around the world that influences these markets. And these markets are usually more so on the traditional asset class side of things. Because when you talk about futures and commodities, not that you shouldn't prepare, but the amount of time required is much less because everything you need to know is to be successful is right in front of you. And that's why we call futures and commodities technical analysis. So I just want people to be aware of that. Now, in regards to your routine that you're recommending, how much time are you devoting to your morning preparation? When are you up, and when are you actually entering the markets?
I think some people think I don't sleep, but 3 o'clock in the morning, I'm on the East Coast. I'm rolling over and I'm looking at China's markets. I'm looking at news coming out of Russia, especially when it comes to commodities, looking at the wheat and rice fields. And when it comes to oil, obviously Saudi Arabia is waking up at 7 o'clock. So to me, that's another 5 o'clock in the morning. I always have to make sure that I keep my eye on the markets. I sleep with my phone and my screens on my side of my bed. I don't recommend that for everybody, but that's kind of how I do it. I have certain music. I like Jimmy Buffett. Listen to that music in the morning sometimes to get me going. I don't drink coffee, by the way. People ask me all the time, am I naturally this way? Yeah, as I think I said earlier to you, I have enough energy for a nuclear power plant.
Yep.
You don't necessarily have to have that either, but you have to have a mindset that says, okay, you know what? Today I'm going to make money. This is not a game. I think a lot of people think this is some kind of game. It's not. It's real life. It's real money. It's real hard-earned money that goes into the markets. And I think it's important to, if you're going to do that with all the other rules, make sure your mind is set too. And I always say every day is a new opportunity. If you failed the day before, not a problem, because guess what? It's Tuesday, it's Wednesday, it's Thursday. Guess what? It's a whole new day and a whole new set of trading. So I always tell people the same thing. Every day is a new opportunity, especially now in crypto. And you know, it never stops. And I'm telling you, I think pretty soon we'll have 24/7 or 24/5 trading in stocks. And I remember when Globex came around back in the 90s. We all thought the world was going to stop because it was around the markets trading for futures. It didn't. In fact, it made more volume, and the volatility continued to grow. And I agree with the same thing too. But I think that it's very important to understand that every day is a new opportunity.
Absolutely. So just so that the audience really understand, you're up from 3 to 5, 3 to 6 researching the markets before you actually click the button. Is that what you're saying?
So I will lean over my head and I'll look at the screens and I'll read them, and then I'll kind of go back to sleep and I'll look up again, and I'll, okay, everything's fine. If things aren't fine, I'll make a good example of that was in the overnight session when for crypto, and it didn't stop, I understand. But about 4 o'clock in the morning, the crypto market, Bitcoin jumped about 4%. I took my profit, boom. And guess what? It came back down when the US options markets began to open. Boom, this crypto went straight down. And guess what I did? I bought it back only because I had one eye open at that time, right? And I think that's a key, right? You can't just, oh, hopefully in the morning. I see it all the time. At 7 or 8 o'clock in the morning, Bitcoin falls because that's when people wake up and they go, oh my gosh, stock, crypto's up. That's not going to work either. You really need to have your eye on what's going on in the markets all the time.
Yeah. Well, for you especially, right, because of the asset class that you're trading as well. So
Yes, sure.
yeah, you're more so focused right on stocks and crypto in this
Hey,
journey of
listen, with
career.
futures, I remember the bond market's 8:30 a.m., right? So, look, it's the same thing. You need to make sure that you're up early, and not rolling out of bed at 10 o'clock and hoping that you make the right decision in the grains markets, because you're going to get crushed.
Yeah,
Pun
which I
intended.
think is a perfect segue into the next rule that you have in place, right?
That's right. The market does not start at 9:30 a.m. Yes, in the stock market, it does start at 9:30 a.m., the cash market. But long before the cash market starts, the markets are always moving in the mornings, especially on a Monday. I'm definitely already on a Sunday night at 6 o'clock. I am already watching the market, seeing what the futures are doing. By the time that 9:30 rolls around, you better have your game plan ready to go, your mindset and ready to go. It doesn't mean you need to make a trade. You don't have to make a trade at 9:30. You don't have to do anything. But you better understand what your game plan is. And when you have your game plan, when the cash markets do open at 9:30, then you already know what you're going to do. If the market falls, you know what? If I see the market hit this price, I'm going to be ready to go. I want to put my limit orders in. My orders, I want to make sure that I have the right number of orders, and what's my game plan for the day. That's why I always say the market does not start at 9:30 a.m.
Yeah, well, Stephen, I'm going to play the devil's advocate here for a little bit. So I'm kind of curious. What if I am not a early riser? I'm not a morning bird. I'm more of a night owl. Am I in the same capacity to become successful as a trader, or do I have to make some sacrifices and adjustments to my routine?
Well, I always tell people you got to make sacrifices, period, to be a trader. We do sacrifice a
Uh,
little bit of a lifestyle, yes. But I will say no. The answer is no. I mean, the cool thing about trading is that there's a market everywhere around the world. If you don't want to get up until 10 o'clock, fine. But I wouldn't suggest you trading certain markets. If you really like foreign markets, great. That's a great, and maybe your day is different. If you're just a casual trader, that's okay too. But if you're looking to make this as your job and the way that you supply your own income, no, the answer is no. You better get your behind up out of bed and you better start moving. But if it's not, if it's a hobby or an investment side, then no, you don't. I would still tell you to get your mind right, whether that's going to work as a plumber, as we talk about, or if it is becoming a trader. Having your mind right and having your life in order is always a good thing and makes trading a whole lot easier.
I love it. Well, and thank you so much for that point of insight, right? Anyone here, if you want to take this seriously, you got to do it early. That's what I'm hearing, right, Stephen?
That's right.
Yeah. And it seems to be the same way for those who have found success within our firm, as well as the people who trade at a high level, not just from what we do, from what conversation that we have with fellow industry experts. And so, Stephen, to end this podcast on rule number 9, right? What do you have to conclude our episode?
Yeah, you know, one of the cool things about having your mind right and all of that, and I always say the same thing, if your position makes you nervous, you're too
Mhm.
heavy. Meaning that if you're worried about it at 9:30 a.m. in the morning, if you're worried about it at 6 a.m., but you're worried about your position, you're way too heavy. You have too many contracts on, you have too many shares of that company, you are short way too much. If your position makes you nervous, then you're not in the, you don't have the right sizing. And sizing is very important, especially in the futures markets where it could be, your contracts could be really worth a lot, right? And movements are very big. I will tell you the same thing. If your position is bothering you, it's worrying you in a way that if you can't sleep at night, you can't eat, your position is too heavy. That means you need to pare it down a bit, bring it back down to a normal size that you understand. If you're hedging against your crops, right? You have more contracts on than your crops can provide for you. That makes you nervous. That's a
Mhm.
problem, right? So make sure that your mindset is not affected by the sheer number of contracts or stocks or crypto that you're holding. Because if that position is bothering you, it's affecting you everywhere.
Mhm. Okay, I love that. So, in regards to practical advice to someone trading, how do they know what is the right balance between, taking good risk, right, in terms of that and risk management, where you're still in a good position to recover, right? So, how do you find that balance between being aggressive and being conservative, according to what you're saying?
Well, I think it's everything, right? It's your mindset, it's your thesis, and
Mhm.
it's how you make that trade. So if you are really confident in the position you're making, then go bigger. If you're not confident and you're not so sure, slow down, think about it, because you can always buy and sell. You can always add to positions. You can take away from positions. You don't have to be, and as I always say, even with my strongest theses, Philip, I don't always go what I call full boat. I will say, you know what? I'll put a position of 25%, and this is what I think. I think the price of apples are going to go up, so I'm going to buy 25% of that position. And if it goes down, great, I'll buy more. If it
Yeah.
goes up, great, I'll buy more, or I might take some off. You don't have to go full
Yeah,
boat
you're
all
you're
the time.
scaling in accordingly when you see momentum, and in more advanced trading terms, we on our side call it the iceberg order, right?
Okay, yep.
Yeah, yeah, as you know. So, Stephen, pleasure having you on here. It's always a grand time. Thank you so much for covering your first 9 rules, 9 big rules of trading. And Stephen, if anyone is curious to learn more from someone like you, right, and what you're doing, what is the best way for them to get a hold of you?
Yeah, it's very simple. My email address is steven@quasarmarkets.com. You can always get a hold of me at my email, or go to our website, quasarmarkets.com. I'm always there. You can click on there too as well and come in, and I'll let you know first week of August, we're about to release our new software.
Awesome. And what does the software do exactly, in case they haven't listened to our previous podcast?
It does everything. You can do complete market analysis, and has AI in the system, allows you to get a better, deeper understanding. And that's what I've always wanted to do, is level the playing field by bringing institutional data to both institutions and to retail traders.
Love it. Love it. Connecting the gap between institution and retail. And with
Yep.
that, Stephen, it's a pleasure. I look forward to meeting with you again. I think you are going to be traveling for business. So I wish you the best. Please stay safe. And I look forward to getting together for our next episode. Okay.
Thanks, Philip.
Awesome. Thanks so much. You take care.